Hey guys, welcome to this video. Will Sebastian, pro multi-asset day trader and founder slash co-founder of the Trading Mentor Academy. We teach live every day on charts, as we will tomorrow. Don't forget, you can grab it underneath. So, ETH or Ethereum against the US dollar. I don't cover crypto too often because lots of my members are mainly trade FX, commodities, indexes, things like that. But my methods nonetheless work on crypto as well. And Ethereum, particularly, is very, very rampant. You've got momentum right behind this at the moment, which is dragging it further and further and further and further up. Initially, you started off really with this move teetering around the 25th of Jan, $2,165 or something like that. Weak push, okay, and then really you had your sentiment inflow here and the risk on environment, which you've seen on things like the S&P, for example, going higher and higher and higher, is continuing and feeding into the crypto market. So at the moment, investors are willing to take risk, and that is why you are seeing these massive inflows of long side entries. Okay, price way off your nearest 20 MA. Go on your monthly, and again, you're still very far away. So at this point, really what you're looking for is reference points for exit. I think that's what's on the tip of everyone's tongue. Now, where I've just popped that green arrow, you've got minor resistance. You can see there's hardly any candlewick. There's not a lot there. So if that becomes sticky, it's yet to be seen. If you want monthly areas that look like that to become a little bit more clear, you can indulge on the weekly of the same asset, and you can see there's various candlewicks in the way. So the reason why you're starting to stall, you're starting to slow down, is because that price action that exists on those lower time frames, and again, if you swapped onto your daily, you would see more of it, is acting almost as like sort of like a wall. Okay, it's where short side traders will be looking to get in, and it's where long side traders will start to liquidate. Now, it's not a bad idea, really, in my opinion at least, to start to lock in some gains, okay? Because obviously as the price gets higher and higher, the FOMO kicks in, and if you're holding and holding and holding, you're waiting for the inevitable, which is ultimately a fall. Okay, the market for crypto is not going to go up forever. Okay, nothing can go up forever unless it's heavily, heavily, heavily manipulated or in a weak economic zone, like you've seen with the Turkish lira, massive, massive buying and manipulation. So I wouldn't really hang on to everything you've got. I would consider locking in gains at this point, because you are approaching resistance and there's every chance you can fall. I'm not saying it's definite you'll fall, and I'm not saying it's definite you'll fall massively. I'm just saying this is a HVA, and if you get sudden liquidation, the whales will pull you all the way back. Okay, you may see yourself back to 2,750 or so in the near future, using this candlewick here as a reference readout point. Okay, because that's likely where you may see early support feed into the market. So if you had an in the money stop behind that, that could work for you. But again, you're so far off the MAs, so far. Okay, at the moment, you're $700 off from your nearest moving average. That's very, very much. Well, you haven't even hit the moving average since you were at $1,900 all the way back in November. So you're really, really running a risk now if you're holding on to those profits. So ultimately, I wouldn't be shocked if this is a contentious area and you find that long orders are liquidated here. Okay, and that may come around the point that your risk on environment starts to dwindle. I don't think the risk on setting is going to last forever. I think it's going to become the case that when you get rhetoric changing or sentiment changing in the markets, you'll have at least a stall. And it could be at this point that occurs. If you draw a fib from your high to low on your previous moves long term, you're sitting at that point around 70.6. And furthermore, at your 78.6 fib, which normally is quite a reliable kill zone, if you like, you've got key resistance again on your weekly. So this weekly chart being very, very helpful at this point, because it's displaying to you all those minor price action zones for reference. Okay, so this picture which I've got here tells you an awful lot. It's a story of an asset that's exploded up really quickly, doesn't have much price history, absolutely crashed when nobody thought it would, remember? Okay, and that is the point of this video. You don't want a repeat of these highs. Okay, if you're going to buy it, you don't want to do it now. You want a pullback, at least an aggressive pullback, taking you nearer 2,500. Or at the very, very earliest, lightly 2,700. You have to be a long term believer in crypto if you're someone who's looking to invest. Okay, because all that's pulling this up is that positive market sentiment. But ultimately, that market sentiment has to change because traders will never leave their profits on the table forever. You've got to remember that if you don't take profit, you don't make money. You only actually make money once you've closed gains, okay, and you've realized those profits. It's the same in our academy when we hedge. We hedge because we don't like to realize losses. We like to hedge to mitigate them as they rise and control our drawdown accordingly. So ultimate targets, I would say you're probably going to start to have trouble between your 70.6 and your 78.6, or your 70 area to 78 area fib. Will you get to the highs? Well, your guess is as good as anyone's. But if you do reach higher, I wouldn't be shocked if these areas all the way up here become very contentious points. So a little bit to run, but again, you'd have to be a believer in cryptocurrency and all of it as a whole to get there. I'm not saying it won't get there. I'm not saying it will fall tomorrow. I'm just saying at some point you've got to remember that the longer you hold your gains, the more risk you're taking, okay? Because you're not realizing the profits you had. And that's why FOMO affects traders entirely, because they don't get that. They don't get that at some point it's going to fall. And the longer they hold on to it, the more they run the chance. So I hope that helps, guys. As always, don't forget you can join my live trading room. We'll be live on charts for the New York session as we are every day tomorrow. Thanks for watching. Get it underneath. See you in the next one.